let's go ahead and get into it. So I'm gonna start with GameStop. I'm gonna give you my thoughts, and then you can tell me if you disagree or
Sure.
agree, and then just your thoughts on what you think about GameStop. But so what I'm thinking is they have maybe already bought Bitcoin. They have their earnings call coming in June. So like if we have a nice couple of months for Bitcoin, we could see like if they've been buying Bitcoin and they haven't announced that they've been buying Bitcoin, they could have been buying Bitcoin at a discount. If Bitcoin has a nice, rest of April going into May, June, we could potentially see them come out on their earnings and say, "Hey, we bought a whole bunch of Bitcoin at 80K. Now Bitcoin's at 100K or whatever it will be at in June, potentially." Um, and that could maybe skyrocket the GME stock price. That is just my thoughts on what could happen. But I would want to know what you think about that, if you agree or disagree. And then also, just wondering, do they have to actually disclose the Bitcoin that they've been buying, like how Strategy's been doing every Monday? They kind of come out and say, over the past week, we bought this much Bitcoin. Does GameStop actually have to do that?
So with strategy, the reason why you know many of the MicroStrategy bulls like what Saylor's doing is that he is volunteering that information, right? He doesn't have to. So so for instance, I do what I call my dot day and corn day posts. So Sunday is dot day whenever he does a purchase. Corn day is Monday when he announces. Sorry, dot day is when he posts the chart with the orange dots and says that it's time for more Bitcoin. We need another dot or something like that. And then corn day is Monday when he actually announces the buy, right? So no, they don't have to announce the purchases, to my knowledge, before anything takes place. Once they can announce the convertible bond, they can announce the plan to do the ATM, whichever plan they take. But then to actually announce the Bitcoin purchase, I don't believe that they are required to announce that they purchased Bitcoin with it. It'll just be something to do for the shareholders. And I think that based on their previous models that they followed, the GME and Ryan Cohen are more likely to announce these things either at or closer to the earnings call. So I think that's when they are likely to do it. Now, to your point about can this skyrocket the GME stock price, if you take a look at the price from when they announced the strategy to now, I think they're up about $5 to $7, I think. So it already seems like people are front running the news a little bit. Now, granted, the long-term benefit of this is what we saw with strategy, right? That's the guess. That's what people are hoping for. That since August 2020, when strategy launched their Bitcoin plan, they've seen, I think at the peak, it was like 1,500% growth in their stock price from when they started to the peak of the price. So if GME does something like that, I mean, we're looking at a price $200 to $300 or something like that. I think, just doing rough math in my head, from a price right now like $26 or $27. So that's not anything to sneeze at. That's potentially huge. Near term, do I think it can rocket the price? I think people front run this news more than wait for the news to happen. So if we see the price running up to earnings, we can expect that they're probably going to announce that they purchased Bitcoin at that time. And then the usual stock market shenanigans will take place, and then we will find a new equilibrium price, and then we'll see what happens afterwards.
Gotcha. Do you think that they'll be taking their own kind of strategy on, buying Bitcoin? I think they did the convertible debt offering, and then they have a lot of
Mhm.
cash. Do you think they're going to take all that cash, put into Bitcoin? Do you think they're going to have like products like how Strategy's been doing with, STRF, STRK? I know it's super early. Just what are your kind of thoughts on what could happen with GameStop? Do you think they could be like a Strategy 2.0 at all?
So let's touch on each one of those points. They use the convertible debt, and in my mind, that is following the Saylor strategy playbook pretty tightly, by using the convertible notes to buy Bitcoin. They have about 4 billion on the balance sheet. I don't think it'll be smart or necessary for them to use that all to buy Bitcoin. One, why would you empty your coffers to buy Bitcoin and leave yourself with very little cash on hand, right? And I know hardcore Bitcoiners will say, well, cash is trash, blah, 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 blah. That's not how capital markets work, and that's not how companies work. You need cash on hand to help one, attract investors, two, maintain operations, three, expand. There's all kinds of reasons why you would need to have cash on hand. So them using all of their cash to buy Bitcoin doesn't make any sense on any level. Now, another reason is, why would you use cash when you can finance it at 0% or near 0% and pay it off at a future date, right? Because when they do a convertible note, what they're doing is they're taking on debt today to pay it off with shares tomorrow, is essentially what a convertible note is. Or if they're following the Saylor playbook, that's what they will be doing. And I believe that's what they are doing. So it's just a more efficient capital model to follow if you are acquiring an asset such as Bitcoin. Now, to the point of what can they do? Could they do something like a GME version of Strike and Strife and whatnot? Certainly. Is it possible that we have a GME version of MSTY or IMIST, where they're playing the options market to generate yield for the holders of the particular instrument? Certainly. The thing is, for that to happen, the options market's going to have to grow, right? We're going to have to see the volatility on the options market grow. We're going to have to see the interest in open interest in the options market grow for those kinds of offerings, like a MSTY or an IMIST, to be really attractive for a fund to start up, right? So the future is bright and many things are possible. We just have to really see how the next year or two go. I do think that what we will see is a shorter time frame for these kinds of products, right? From August 2020 to April 2025, that's almost 5 years. And it took almost 5 years for the interest in strategy to grow to the point where we have all of these different plays that you have in what I like to call the strategy economy, right? You have the MSTY, you have MSTX, you have MSTU, you have IMIST, you have Strike, you have Strife, you have BMAX, you have OwnB. There's a lot of auxiliary plays on top of it, and that's all also not even accounting for the options market and the huge open interest that they see. Will GME get to the point of having the level of open interest that strategy had? I don't know. But what I do think is the time frame for these other products and for interest in those other products to exist, I think it's going to be much, much shorter.
So you mentioned one thing there with the strategy, all the products that they have with MSTR and STRK, STRF, kind of their entire wheelhouse that they have going on there. What product are you most excited about? Are you just most excited about just spot MSTR, or are you more excited about one of these other products that they've recently launched? And how do you, and which, I guess, which one do you think could help strategy acquire Bitcoin, going into the future the best way possible, or what's gonna bring the most? Is it gonna what's gonna bring in the most money to buy Bitcoin? Is it gonna be the MSTR ATM? Is it gonna be Strike, Strife? Any thoughts on that?
The most, and so let's unpack that. The one I'm most excited about is still MSTR, because my personal investment thesis is that I have my core holdings of MSTR, and I use some of my holdings to get extra yield in the options market, right? I personally don't use an instrument such as like an MSTY or an IMIST at this time. Now, that is not me saying that I'm not going to do it. I may very, very well do so. In fact, in all likelihood, a potential avenue for that would be to take gains that I've made from the options plays and put those directly into something like IMIST or MISTY, and then use that to get that 8% dividend, right? It's all part of what I think of as a capital stack for someone to have. So, but me personally, I'm most interested and most bullish on MSTR, because all of these other products are all for naught without MSTR, right? All of them are existing because of MSTR. So I'm trying to keep my eyes focused on where things are coming or originating from. Trying to keep my eyes focused on the overall investment thesis and having a strong understanding of the fact that these products exist on top of MSTR. They do not replace or should not be thought of as an either or to MSTR, while also realizing that they do have their place and not getting tunnel vision. So that's the first thing there. With regards to what would be the best vehicle for them to acquire Bitcoin the fastest, and what would they use it for? So whether they would do the core equity offering, so what I call that would be MSTR, or whether they can use Strike or Strife and whatnot. The fact of the matter is, at this time, the fastest way they can do that is through either the ATM equity offering on MSTR, or using convertible notes on the core equity offering. That's just because the scale is already there. The amount of volume is already there. The open interest on the options market is already there. It's a set economy of scale that's already present, right? Now, in the future, they've already used the Strike ATM to buy small amounts of Bitcoin. I don't see why they couldn't do a convertible note or something similar on the Strike offering. I don't see why they couldn't do things similar on the Strife offering. But I think what we need to realize is that Strike and Strife, in all likelihood, are not going to grow to the scale of MSTR in terms of equity offerings, right? They're they're going to have their place. They're going to have their own markets, but to scale to the size of what MSTR is at this time, I don't see that happening anytime soon. So my answer would be, for the time being and for the foreseeable future, using offerings and using offerings on the core equity MSTR would be the most cost capital effective, quickest, and scalable way for them to acquire Bitcoin.
So you touched on MSTY there a little bit, and I want to share my screen. Yeah, if you can see my screen here, this
Yep,
is
I shared that today. Yep.
yeah. So yeah, I saw you share this today. It shows you MSTY versus MSTR, and I talked about this on our YouTube channel about, if we're looking to invest in MSTY. Me personally, I'm younger, still working in my career, so I'm looking for maximum growth. So I'm not really looking for a fixed income vehicle. But this chart here kind of like caught me by surprise. MSTY looks like it's really underperformed MSTR over the past year or so. So, is there anything you want to say here in terms of like giving a warning? Because there are a lot of people who have been very interested into MSTY, especially over the past couple of weeks. It's all I've been seeing on Twitter, X, and YouTube.
Mhm.
Is there any warning or anything that you want to give to the audience, viewers, about MSTY and investing in that? Thinking that, because I think some people may think they're getting the same returns from MSTR, but just in a fixed income fashion. But is that actually true?
No. So I'm not going to issue a warning, but it's about understanding what you're investing in, right? MSTR versus MSTY is not an either or proposition in my mind. They're just different portfolio management theories. So someone is thinking to themselves, if I get MSTY, when MSTR starts to rip, I'll be getting appreciation in the price of the stock and the price of the offering, and I'll be getting a larger dividend play, right? That's the general thesis, and it's giving you fixed income, which means that every month you're getting a dividend payout from MSTY, and you can use that to live off of, or you can take the dividend and reinvest it in MSTY and get a larger dividend, or take the dividend and invest it into MSTR, right? There are all kinds of different ways you can play this. The reason why I say this is not an either or proposition is that you have to look at things in terms of what I mentioned earlier. Like, think of it as a capital stack. How are you stacking your capital? If you just want pure upside potential, and if it's a binary choice like this, or perhaps a trinary choice now that we have IMIST, if you are looking for pure upside potential, MSTR would be the play. If you're looking for upside potential with also a fixed dividend that you can either live off of, use to pay for expenses, you can use to reinvest, and so on and so forth, there's no harm in considering a allocation towards MSTY or IMIST, the offering from Bitwise. What you're seeing here on this chart is not surprising to me, because the share price of MISTY is not going to see the same appreciation as MSTR. It's not designed to do that. It is designed to be a fixed income play. It is designed to give you a proportion. I believe it's $1.12, $1.13, something like that, in the most recent time per share, in the form of a dividend payout, right? So you're not going to get the same upside potential that you're going to see in MSTR in MISTY. So there's comparing it in purely in terms of share price, it paints a picture, but it doesn't give you the full picture. Now, if you're someone saying Misty is a better opportunity than Mister, and I'm selling all of my MSTR for Misty, you might want to rethink that, because you're going to be not only capping your upside potential completely, but you're also going to be entirely dependent on a dividend payout, and now your entire capital stack is allocated towards a dividend payout. The smartest play is to say, if you have, and this is just me, throwing out a number, if you have $5,000, right, put 3,500 to 4,000 into MSTR, put 1,000 into Misty, and get a little bit of a dividend, and that way you are diversified, but you're still getting exposure to both offerings. That is not financial advice. I'm just trying to give people a different way of thinking about things. It is not an either or proposition. You have to understand what you're investing in and why you're investing. If you have reason to say that you want a monthly dividend payout, understand the tax implications of that. Understand that you're going to be paying short-term capital gains tax on that in all likelihood. Understand that you should essentially take it, whatever your dividend payout is, and cut it in half if you're doing that. That by that means, if you're putting it in a tax advantage account, there's some different nuances there. I'm not a tax expert, so I'm not going to get into all those. But there are different considerations to take into play when you're getting that dividend payout, right? It's not as if you're getting that dividend and then it's just all your money and there's nothing to consider. You're paying taxes on that. So you have to take that into your thesis as well. So if you're able to get that dividend payout and it's able to cover expenses, and you think that fits your investment model and that fits your investment thesis, do so. But don't think about it in terms of an either or. But I will say that in a capital stack, again, not financial advice, just my own personal opinion, just like I said earlier, you should be more heavily weighted to MSTR if you're looking at having exposure to MSTR and MSTY or IMIST. That would be, in my opinion, the better course of action.
Totally agree with you there, MSTR or the fixed income vehicles. But for people who want to hear more about the fixed income vehicles, MSTY and IMIST. I think you guys had Jeff, can't remember his name, but Jeff Park. He was on your guys' stream the other day talking about IMIST, and it's a new fixed income product. Are there any differences between MSTY and what they're doing with IMIST? I mean, generally, they're both selling covered calls, capping upside to generate that fixed income yield. But is there any difference that people should be looking at when choosing MSTY or IMST?
So MSTY, they are using a more, I would say, aggressive model. They're doing weekly covered calls, biweekly covered calls. I think they're also doing some credit swaps. They're using quite a few different methods to generate the yield. But as you mentioned, they're all playing the options market, right? So of course they're looking at different methods and different strategies within the options market overall. IMIST, I think, has taken a more longer term approach. They are looking at longer data cover calls, perhaps. They're looking at generating a more steady fixed income. And what I mean by more steady is that there's going to be less volatility within the volatility, if that makes sense. I think their plan is to have the ability to generate that yield by using a different kind of options market strategy to generate the yield for their shareholders. So getting into the nitty gritty of those two, really the big consideration you should have when you're looking at these two is, one, the percentage payout. Two, do you truly understand how they're generating that 8% or that 9%, 10%, whatever percentages they eventually go to or whatnot? I believe both of them are 8% actually. Do you understand how that will impact you? Do you understand how these will operate in market downturns? Or do you understand how they would operate in prolonged bear markets? Everyone tends to focus on the bull market case without looking at the other side of the coin, right? Those are the real considerations to take into those are the real considerations you have to take into account, versus simply thinking about, oh, how does one generate a covered call strategy versus another? I think that's a valid consideration, but it's only part of the puzzle. And I hope that answered the question. I tried to give a more fleshed out answer.
Going to change gears here a little bit with I want to talk a little bit about what Trump has been doing with the tariffs. He came out and he initially issued tariffs on every country, then he took them back, and now it's just China. It's kind of been like this on and off again game. What do you think about these tariffs? Do you think that, yeah, just what do you think about the tariffs, and how will these affect Bitcoin, our strategy going forward? And do you kind of just tune all this noise out, or is this something that we really have to pay attention to with what Trump's doing with these tariffs?
Well, it is something that I pay attention to in terms of just keeping myself informed. I've posted about tariffs a few times, some of my thoughts on them. So the thing about the tariff conversation is very, very challenging. Is that, just being blunt, most people don't know what the hell they're talking about. So with that said, a tariff is a tax. So whether it's coming from China, India, Vietnam, whatever, the person that is receiving the goods is paying that tax on the items. And in the case of America, it'll be American businesses paying that tax, right? So when it ships into the country via whatever means, they're paying the tariff to receive those goods. So it is essentially, in essence, one of the largest increases in taxes we've ever seen. So that's one of the first things to consider. Now, the theory behind it is that it's going to bring more jobs to America. It's going to bring manufacturing back to America, and so on and so forth. That, in my mind, is not necessarily an accurate statement, because the reason why China and these other countries are so competitive on the global market is because of cheap labor. Bringing manufacturing back to America for some of these goods is not going to solve the cheap labor problem, right? We're not going to be having American citizens earning $2, $3 an hour or sometimes less to manufacture these goods. So the net result of that is that the price for everything is going to go through the roof. That's going to be the long-term effect of it. And there's been many studies on this that bear that out. Now, what I do think that's also likely going to happen is that this is just going to hasten the move towards automation and robotics. So the manufacturing jobs and the factory work and the industrialization and the overall infrastructure development that's going to be needed for us to be competitive on the global market with cheap labor is not going to come from human beings, or as Howard Lutnick said, screwing in the screws to the iPhone, right? That just doesn't make any sense. What likely is going to happen is that the development that we're going to see is going to have a high focus on automation, robotics, AI, with the need for human workers to work alongside those devices and alongside those innovations. And it's going to require an entirely different skill base than we have right now. And it's not going to solve the problem of trade imbalances or being competitive in a global market or anything like that. Now, to how that affects strategy and how that affects Bitcoin, well, quite frankly, as you saw, or maybe as you've been seeing, the tariff uncertainty is affecting the entire global market, right? So it obviously is going to affect strategy in Bitcoin. Now, the challenge is, some people are saying that this is going to cause Bitcoin to go like a risk off, right? It's going to cause people to say that, well, Bitcoin is a risk off asset, and it's going to spur investment into Bitcoin, and by proxy, that can help strategy. I'm inclined to disagree, because I'm one of the people that thinks, or I'm a person that thinks, that Bitcoin won't truly go to be a risk-off asset until the market cap is much larger, and it's far more systemically relevant and important in terms of the global economy. Right now, it's still a very niche product, even though it's a $2 trillion market cap. The bonds market is like 300 trillion, and if you want to look at size, the derivatives market is anywhere between 1 and 2 quadrillion. So Bitcoin has quite a long way to go to become systemically important and systemically relevant, which in my mind, that would spur that true risk-off transition for Bitcoin. Now, that said, in the near term, there's nothing we can do but ride the waves. I don't think there can be any real hard prediction either way. So for me personally, I just try to drown out the noise, and if there are any real investment opportunities that come up in the form of like a sharp price downturn or a price downturn that I can take advantage of, I will do so. But that's pretty much all that I can do. I just try to put out information wherever I can, keep myself informed wherever I can, but realize that a lot of this is noise until some set plan is put in place. And uncertainty that we've seen in the markets, the uncertainty we've seen in the stock market, the bond market, so on and so forth, is a direct reflection on the fact that there is no set plan, and there's been a lot of hemming and hawing, a lot of back and forth, despite the tough talk. So politics aside, this isn't about politics. This is just straight up about policy and its impact and the second, third order effects that we're going to see from those impacts. And quite frankly, I can't control those. All I can control is how I react to them. So I'm just trying to keep a level head and look for opportunities where I can find them.
My view is that tariffs aren't really the best thing for our country. I think we should get rid of tariffs across the board, because then we can get even cheaper labor from across the world, and or cheaper products because they have cheap labor, like you said, from countries across the world like China. But I guess we'll just have to wait and see how the whole trade war plays out. And then I wanted to share this screen here, switch gears here a little bit. This is global M2 money supply. This chart has been kind of hitting new all-time highs over the past couple of weeks. We're starting to see global liquidity. Also, that chart is starting to hit, new all-time highs. I think it's been in chopping sideways since like 2021. But over the past couple of years, we've seen Bitcoin kind of really trade with global M2. This is something I remember a couple of years ago. I saw this originally from Raw Paul, but some people, this chart here is from Colin Talks
Yeah,
Crypto.
he's been posting M2 charts for years now. Definitely, yeah.
Yeah. Do you find any? Is this something that you pay attention to? The M2 money supply. Do you think Bitcoin could go up and continue to follow this trend? It does seem like it's been pretty accurate over the past couple of years, but going forward, do you think that this trend continues to play out, where they have these offsets where they say there's about a 100-day lag where Bitcoin just follows that M2? And I remember looking at this back in November, and M2 was peaking, and then a couple months later we see Bitcoin go down, and global M2 is going down in December and January. So it seems like it's been playing out. Any thoughts on this chart here?
Yeah, so the global M2 is definitely a valid data point, and it's definitely one of the ones that I look at. I want to make sure that people have an understanding of essentially what this implies. The global M2 going up just means the amount of liquidity in the markets the amount of liquidity as a whole is going up, and therefore, if there's more liquidity, it stands to reason that asset prices are going to increase. Assets, equity, so on and so forth are going to increase, right? That's the general thesis. The very, very short, condensed version of the thesis. Now, when you see that there's a lag, it is not a direct correlation. It's not as if M2 goes up and then Bitcoin goes up with it, right? Because liquidity needs to hit the market, and the effects of the liquidity on the market needs to be felt before we can see the result, right? So the cause is a rise in general liquidity in the global markets. The effect is that liquidity takes time to go into the markets, and the result is a rise in asset prices, a rise in commodity prices, so on and so forth. So that's the general thesis. I do think it's valid. I think it's also, one of the points that people tend to just, I don't want to say ignore, but I think that's the best way to describe it, for lack of a better term. Because if we take a look at Bitcoin's price, like you mentioned, and even Strategy's price, everyone was lamenting that the ATM is causing the price to go down and that Bitcoin is going to go up. And I thought Bitcoin could still go up to about 120 before it retraced. But turns out I was obviously wrong on that. But you did notice that the M2 started to go off and drop down at around the middle to end of November into the new year, right? So I broke my own rule in focusing too much on near-term price activity to guide my actions versus paying attention to near-term and long-term and global considerations. So when we look at something like M2, it is definitely, in my mind, a valid data point. It is not the only data point, and I want to stress that correlation doesn't imply causation, but there does seem to be, and there has been, a very strong correlated relationship between global M2 and all assets and equity prices, not just Bitcoin. What I would like to just mention most is that in the current market environment, with how uncertain things are, I think the best course of action for everyone is to try to keep a level head and not get too caught up in things that go on a day-to-day and week-to-week basis. I've been posting about tariffs. I've been posting about global M2. I've been posting about different things, but that's because I like to share information, and I just like to share what I'm thinking. Um, if you are an investor in something like strategy, Bitcoin, Nvidia, what have you, you're not investing for headlines and narratives, or at least in my opinion, even though this is not financial advice, what I follow is not that. You have to know what you're investing in. You have to understand your investment thesis. If you still have faith in that and you are prepared to reap the rewards and the consequences of that, near term, all of this is noise, and try your best to not let it like get you down, and try your best to not allow it to cause you to lose focus on what it is you are trying to achieve. And I think that's what I would end on in terms of just general thoughts I wanted to share, because there's so much noise on Twitter right now when it comes to financial markets. I mean, there's a lot of noise on Twitter regardless, as I'm sure you've noticed, but especially with financial markets right now, with Bitcoin, with strategy, with everything, there's just a lot of noise, and I think that people need to try to do their best to recenter themselves and allow themselves to get carried away with narratives.
You guys make sure to check out Adrian over on Twitter. His X handle is right there. You can see it right underneath his name. Check him out on Twitter. He has a great take on strategy, Bitcoin. He even talks about AI a lot, so I enjoy those takes. Make sure to check him out. And appreciate you coming on, Adrian, and definitely catch you next time.
My pleasure. Anytime. Later, guys.